Live.
Hello everybody, it's Simon Dixon here and welcome to episode 60 of Bank to the Future Live. And this is going to be a special episode just on the Bank to the Future secondary market. So in order to get your questions answered, we've actually picked out a lot of your questions already, your most common questions. And in order to go through those, we've got Famida here from our investor relations team. And we've also got Adam, who can answer more of the legally minded questions as well, so that we can make sure everyone has a very clear understanding. The reason that we're doing that is we haven't covered the secondary market for a while, but we've got new features that we are going to be releasing that we've been waiting for in order to bring the secondary market out of beta and put many more deals on the secondary market. And so we thought this was a good opportunity to make sure that our investors have a good resource to really, if they're thinking of building a portfolio of the most successful and largest companies in the crypto and Bitcoin industry, then they can go back to this video and make sure they understand it before they actually get started. Or maybe some of you have built a portfolio already and you want to ask a few questions. So we'll be taking some of the live questions on top of the questions that we have already pulled out. So just before we dig into the new product features, we'd really appreciate it if you could like this video so that YouTube can make sure that more people get to watch this video, and share it with people as well. And make sure you subscribe so that we can notify you, YouTube can notify you every time we go live. So hit the bell symbol in order to do that. So the new announcements that we'd like to make before we dive into the questions is that we have now implemented some of the features that we think are really important before we actually start letting more and more of our investors know about our secondary market. So we released it a while ago and we've been busy building out the features that our investors wanted to see. So it started with a very basic skeleton, and then we added charts and more information, public forums so that people can have discussions before investing, as well as private investor forums called the Investor Zone. But what we also started to notice is that there are certain aspects that we've learned while in the beta phase of how to simultaneously create a market that satisfies our understanding that we now have of how investors want to use the secondary market, with also our understanding of what the companies are concerned about where they're having a market. So we've now believed that we've got what we think is the right balance between making a market that's useful for our investors, as well as having something that our companies are going to be, it doesn't cause any unintended consequences for the companies. And the first feature that we wanted to release before we come out of beta is the price floor. We'll be going a little bit deeper into that when people ask about the price floor. The other thing that we've been doing is we've been setting out the policies of what actually qualifies to go onto our secondary market. And we'll be going deeper into that as well, and answering some of the common questions around what actually is the secondary market, how does it work, and what are investors actually getting when they purchase on the secondary market. So just while Famida's getting those questions ready, I'm just going to do a quick screen share as well so that you can understand exactly where to access these opportunities if you qualify to invest on BnkToTheFuture.com. So the first thing to notice is that you head over to this section here and you can see a section called Start Trading. Start Investing is where we have all our primary market. So primary market means that we're working with a company in order to complete a funding round or a part of a funding round for that company. At the time of this recording, we've just closed our two recent deals, which is the Robinhood SPV and the Layer 1 deal. Now we're working with our next 5 deals to go on the primary market. They're going through the due diligence process before we put them live there. In the meantime, we have our secondary market, and we've got a video here and some FAQ that I think we can tighten out a bit more and add more questions with some of the things that we cover here. And if you head over, you'll see some of the companies. So we've got our first 7 or 8 companies, and we'll go a bit deeper into why it's, why these are named here and what they actually are, what you're actually getting. But you can also, once you hit a deal here, so you can see we got the Bank to the Future Bitfinex SP company. So this is a company backed by shares in Bitfinex. And I can hit here, I can go over to the trade button, and you'll see here all the people that are looking to buy, all the people that are looking to sell, and we have an over-the-counter market to where you can take any of these orders if you want to buy or sell. You can see a bit of price history, order history, and I can quickly, let's say I've got some Bitfinex SPV shares. Well, I can click here on the sell section. It's a really simple user experience. So I can simply enter how many shares I would like to sell. So let's say I'd like to sell 100 shares and I'd like to sell those at $20. Let's say I put in a price of $2. You'll notice that it will tell me that this is below the price floor, and we'll go a bit deeper into that feature. But it will let me know if I'm trying to place an order below the price floor. And here I can have $20, and it will tell me if someone's already got an order, and I can just take some of those orders, or I can enter a higher price that I'd like to sell, and it will let me know whether those orders exist. Let's see, what price should I do here? Say $10. And this is, oh, sorry, that's the reason why I'm a bit confused, because it's a buy order. So I can place the buy order any price above the price floor, and it will tell me that there's someone else looking to sell at that price. So let's say I wanted to do $4, it's below the price floor. So I put in $4.50, and then it would tell me who's to match up, and I can take one of those orders. Now, let's say I actually already had shares. So I can go back to the market, and in this particular demo account, we've got some shares in the Kraken SPV. And now you'll notice that there's actually, once this comes up, it's probably a little slow because we're streaming at the same time. I've not only got the buy button, but I've also got the sell button here. So I've got some shares. It will tell me some details about my position, and I can enter an order at which I'd want to sell. So let's say I've got 100 shares, and I would like to sell those at $20. It would tell me that that price is below the price floor, so I can't sell at that price. But maybe I do it at $30. Great. And it would tell me how much consideration I would get if I successfully sold at that price. And then it's like a bulletin board. That order will go up there. There's some very important legal disclaimers. The reason we put this here at every order, we don't want these buried in the terms and conditions. We want you to understand some of the challenges when you're purchasing shares or selling shares. And it will tell you about the lack of information rights, dilution, and lack of dividends, and some of the other things that are important to understand when making a purchase or sell order in an SPV. And then it will just give you a simple order summary. You also notice that if you want to get a discount and get 50% discount on your trading fees, then if you are a Bank to the Future member and you've got Bank to the Future tokens on your account, then it will tell you can select here whether you'd like to pay with your Bank to the Future tokens or not. And if you pay with those tokens, then you actually get a 50% discount on the trading fee. So that's a very quick overview that I wanted everyone to have so that they could understand that. And now I think this is a good time for us to dig into the questions, the most common questions from our investor relations team. So Famida, what have you got for us?
So I guess let's start off with the basics. What is the BF secondary market? And I guess you've shown slightly how it works, but yeah, a little bit more detail maybe.
Yeah, so the goal of the secondary market was for the mission that we're trying to achieve here is that if somebody wants to come along and they're bullish on the future of the Bitcoin and crypto sector, then some people will be investing into Bitcoin, others will be investing into alternative cryptocurrencies and products and investment products. But we wanted to create one place where somebody could get complete exposure if they qualify to invest, to the equity of all the companies in the industry. Now that's a goal. We don't have all the companies in the industry yet, but our goal is to get there, whereby if there is a company missing, thanks to the relationships that Bank to the Future has built over the last 10 years, we can get some of those companies into one of our special structures that we'll go a bit deeper into. And once it's in our special structure, we can match together in an over-the-counter market between qualifying investors and automate a lot of the complications in terms of transferring shares, signing share agreements, and we can automate that whole process to make a really, really seamless experience where someone can come along and currently they can pick the companies that they would like to buy shares, and they can set a price target at which they'd like to sell it, and it can just sit there on the market until someone else wants to come along and take that order. Now, at the moment, it's just simply you pick deals. The future vision is obviously that someone could come along and just simply say, I would like to have $10,000 diversified across the whole industry, and with a few simple clicks of a button, you can have complete exposure to all of the major companies and some of the more earlier stage companies in our industry. So that's why we built the secondary market, because quite frankly, there is nowhere out there where somebody can actually get exposure to the growth of the companies that are actually building this industry.
Can I ask a side question to that then?
Sure.
So what does it mean for, we do talk about invest to hold, right? So what does it mean in that sense?
So when you're investing in private equity, you're investing in a high risk, high return, long-term investment. That means that people invest in private equity because the returns are expected to be very high if the company succeeds and if the company exits. High risk because the likelihood of that happening are actually, the odds are against the company doing that, because most businesses fail. And so it's a high risk, high return asset class. And therefore, the long-term time frame in which a company, so let's say you were an investor in Facebook, or a company maybe in our industry like Coinbase. So Coinbase, when they first started, is very hard to secure funding. And so they might come on something like our primary market, and we would pull together lots of investors. But then it took Coinbase from 2011 to approximately 2019, so a period of 8 years, to be worth $8 billion. But if you invested right at the beginning, it was, those early seed rounds were several $1 million, the value of the whole company. So I'll give you an example closer to home. Imagine you did that. Well, firstly, if you invested in Facebook, it took them about 9 years to go public. So these are where the ultra high returns can be achieved if the company gets to that stage. Another example is we did an early funding round for an exchange called Kraken. That was done at approximately $20 million valuation. And the second funding round was done at a $4 billion valuation. And they have a plan for how they want to get to another 10x from here if the industry succeeds and the company succeeds. So it's long-term investing for people that want to deploy capital into the growth of an industry, as opposed to trying to trade and really quickly make returns in a very fast way.
Yeah, and just to add to that, we were talking about this last week. It's more another aspect of it is, if you've just entered into this industry, you need to have a quick snapshot of the industry. You want to catch up on the 10 years that have passed in crypto. And by coming into the secondary market, you've of course missed the primary offerings of the previous ones that happened 7 years ago. But you now have an opportunity of catching up. And to that extent, no one gets left out, and people can still join in this crypto journey. They may come in a little bit later, but they can still join and have exposure to the whole industry as well.
So does that mean that the shares bought on the secondary market, it is diluted in some sense in terms of quality or what they're going to get in returns?
So this probably leads to one of the questions that's coming up, which is that traditionally when we were in beta, we only took the most reputable companies in the industry. And the rules of investing are, the higher the risk you take, the higher the return, the lower the risk, the lower the return. That's just the rules of the market, every market in general. And so that applies to private equity as well. So if you want to invest in a company like Coinbase, then right at the beginning, they were worth a lot less because there was factoring in the risk of whether they would succeed. But now a company like Bitfinex or Kraken are household names. The likelihood of them, or getting towards an exit and becoming bigger and growing from here is they've taken out a lot of those risks. So therefore you pay a higher price for it. In the beta, we only wanted the companies that had the most established brands. But now we're moving out of beta. Our goal is to actually introduce a wider range of earlier stage deals so that even if you miss the primary offering, there might be somebody that wants to sell their shares because they need liquidity, and they might be willing to sell those at the very same price as what they invested because their circumstances changed. And therefore you can actually still get in at the identical valuation to if you were investing in the primary. But if the company has then come along and done another funding round and that company is worth a lot more, then we're introducing a feature that we'll cover later called a price floor, which would then mean that you couldn't get in at that lower price. So it's kind of the differential between when the companies are doing their different funding rounds, you have this opportunity to get in at a lower price, as opposed to once the company's got to the next phase of their growth.
Okay, cool. So on to the next main question. So what is an SPV and which SPV shares are available for trading right now?
Okay, well, just on the point of what is an SPV, I'm sorry, it sounds like a complex term, but it's a special purpose vehicle. It means an entity that's created like a company, but it doesn't operate like a company. It doesn't, buy and sell goods. It's not involved in any trading activity. It simply holds an asset. And that asset, in this case, may be the shares of a company that's raised funds on Bank to the Future. And this company, all it's doing is holding those shares of the company that's raised the money on Bank to the Future. But then underneath that, the company itself, what the people are buying into in the primary market are the shares of that SPV. So it's one-to-one, it's a mirror of the shares of the company, but all it is doing is holding an asset. And so in the primary market, when people come in and they're making an investment, they're buying SPV shares. And that SPV is created solely with the purpose of buying the shares in the investment in the company's raising finance. In the secondary market, there is no difference. The shares are owned by you when you make your investment, the SPV shares, and then you're able to trade those shares. So as you can see on the screen, when you see, for example, Kraken or Ripple or Bitfinex, it's a very specific name. It's got the name of the SPV that is being used where people can buy and sell shares. So that's one of the biggest things when you're coming to invest in Bank to the Future. There's a lot of language about you being clear that you're not investing directly into Kraken. You're investing into a special purpose vehicle that itself is investing in Kraken. And so you have those shares. It's totally mirrored. There is no difference, one-to-one on the shares of Kraken. But here you are, you're holding those shares in the SPV. And because of that, you're then able to trade them. So it's one of the benefits of being in this SPV structure. If you were holding directly the shares in that company, there may be restrictions on whether you can or cannot trade the shares. But by it being in this SPV structure, we were able to create this internal market amongst the SPV holders That's essentially the basic structure.
Yeah, the other thing to add to that is why we actually do that in the first place. There's this concept of a private company and a public company. So if you want to be a public company when you're traded on a stock market, the cost to do that is so high, and the regulations around it are so high that you have to really be a very established company. So if you want to invest in, a company that's much earlier stage in order to get those high risk, high returns, then you can't do that on the public markets because the cost to do that is too high. So many of these companies are not really, they might be on the path to going public, but they're not ready to go public yet. So they are restricted in terms of who can actually invest. And this is called the private market. And the private markets, they have different regulatory requirements. And so what we've done at Bank to the Future is taken out all of the complexities around making sure that you qualify to be able to invest in the private markets, and use our leverage that we have by being an investor in many of the companies in the industry to actually create something that works for the company, whereby they don't want and they can't have 3,000 investors directly, and they don't really have the resources to manage that. So by us putting together an SPV, we can take care of much of the headache and the processes we built over the last decade as the first securities business in the industry. And then that allows you to be able to, really not dedicate your whole life to being a professional venture capitalist, and get access to these opportunities, provided you are depending on your country, the investor, the regulations in your country qualifies you to invest. So it's kind of the reason that we do this is to create a much more willingness from the company to have more shareholders, and to give you the opportunity to diversify widely without necessarily having a full-time career as a professional venture capitalist.
So a very basic question here then actually is, well, I did ask what is an SPV, but on the trading platform, it does show as SP and not SPV. Is there a reason for that?
Yeah, a segregated portfolio is what SP means. When we talk about SPV, we are talking about it in general as the idea of creating an entity which has only one purpose, which is to hold an asset. In this case, it's the shares of the company that's raising money on the Bank to the Future platform. SP is a specific type of SPV, if you will, and it's the type of structure that we deploy using our Cayman Islands exempt registered entity. So, it's not necessarily that it's something different, it's just that it's specific. It's a specific type of SPV.
Cool, thank you for that. Next question, you touched on it earlier, Simon. What do you mean by price floor on the secondary market?
Yeah, so the price floor is a feature that we were waiting to release to come out of beta. And there's several reasons why we introduced the price floor. So, in a normal public market, you'd have, retail investors all around the world trading with institutional investors that would also be trading with longer term investors that might be investing for your pension. And you put all of those ginormous pockets of money together, from universities investing through funds and endowments to all of these different ginormous pockets of money, and it makes up the public markets. And because of that, you have this concept called liquidity. And liquidity means that when you want to sell, there's normally a buyer. And when you want to buy, there's normally a seller. And so you have a very efficient price mechanism. Such a price mechanism and liquidity does not exist on the secondary market. These should still be seen as long-term investments, and so therefore, and because they're restricted private investments, you don't get the same level of ability to market, for example. And so marketing is restricted, and therefore, you don't have that big pool of buyers and sellers creating efficient pricing. So one thing that we noticed was happening is that when we launched a new deal on the secondary market, through nothing to do with the value of the company and the success of the company, there would be investors that wanted to sell simply because they needed liquidity, or they wanted to invest into something else, or their circumstances changed and they wanted to buy a house, or whatever it might be. And so these personal reasons for wanting to sell have no reflection on the value of the company. And because it's a more restricted market, you'd find that there would be a lot of people that wanted to do that. They would just be racing with each other to try and sell by entering a lower price, and then a lower price, and a lower price. And so really you got this downward pressure on price that had nothing to do with the value of the company. That causes a few problems for both the company and the other investors. The patient investors start to feel that even though there's this company that's been valued at a much, much higher price in the private, through a venture capitalist investing, but then their SPV shares might be at a lower price. And so that is demotivating for an investor and can cause them to want to sell because they think there's something wrong with their investment, when really it's got no reflection on the valuation of the company at all. The second thing is that when the company, if they're succeeding, they're going to be doing further funding in the future. And the goal of a company that is on a growth path, let's take a company like Kraken. If they're on a massive growth path, their goal is to sell shares at a higher valuation. So when they sell shares at a higher valuation, it sets a new price, a new value for the company. But one of the problems we had with Kraken is that when we did funding for them, that was at a time when no one was interested in investing, or our industry was a lot smaller. But now they didn't need to do funding because they grew so fast and they became such a profitable company that they didn't necessarily need to do any funding. So what was the value of that company? Well, it's very hard. So then they go and do another funding round, and now the industry has determined through investments that they're worth 4 billion. So what we do is we take the price of that last funding round and set it as a price floor, so that if you want to sell, no problem, you can enter an order there, but the lowest you can set the price is the last funding round. So then Kraken come and does another round, and then we set a new price floor. And so those that got that entered into the market before the new price floor was set, as long as that is at a significantly higher price, then everybody is selling at either the same price or a higher price. So this, what we thought was the best way of tackling simultaneously those two issues. Also what we had found is that when somebody wanted to buy into Kraken with a long-term vision, they weren't necessarily, they were willing to pay the right price. And so really setting a lower price didn't really drive more buyers in. And so now that we've got this price floor feature, everyone can be happy, the companies that can be happy, investors can be happy that those that are less patient or not in a position don't mess up the valuation. And it was really the missing feature that made us comfortable in introducing many more deals to our secondary market, so we can then focus on that goal of allowing people
high risk, high reward type of investment, but creating a secondary market that is aligned with the business that is raising funding is good for the business, but it's also good for the investors. But to make that secondary market fruitful, all of the incentives have to be aligned between the company raising funding and having to go through multiple rounds, the investor that wants to support it and take that risk, but knowing that if they need to, that they're in a position that they can sell their shares at a later stage. Maybe they have to hold it for a year, but at a later stage they're able to sell their shares if they need to. And so we want to ensure that three-way relationship works really well: secondary market, investors that are happy in the primary market offering, but also companies that are willing, to work with us on enabling that secondary market. And I think it's a wonderful thing, to be able to introduce that for private markets, and in particular for the, the crypto market that's on a high growth trajectory. But to do it, we've got to do it in a way that all the incentives are aligned. And this price for feature really ensures that that is the case. And from that, we can expect, of course, we can't anticipate what will happen when we come out of beta, but we can anticipate that, we won't see a reduction in volume. I don't think that will be necessarily the case, because it will give confidence both to the person who's raising funding and also to the investor that's investing, that this is a solid investment and that has longevity. And so it's just a question of what are your personal circumstances and if you need to get out. And people that missed out can come in, and that the company that raised the funding in the first place feel that they're following along in the same journey and that they're not being disadvantaged in a certain way. So it's purely about alignment to then produce an effective secondary market.
Okay, so that's a good segue there, Adam. This question's for you. So what type of investor is restricted from the secondary market and why?
Yeah, so when you sign up on the Bank to the Future platform, as you've already done, the first step is accepting the terms and conditions. Second, and that allows you to become a member of Bank to the Future. The next is you need to be verified. The verification is you have to present your passport, a picture of yourself, and also proof of address. This is the identity verification component. And when you go through that verification, we are also checking to see if you're from a country where transactions with Bank to the Future may be restricted. That's not because of investment reasons. It may be because of other reasons, such as sanctions. So we do that first assessment. When that is complete, the next stage is for you to be certified with Bank to the Future. We need to be able to determine whether you are or not a qualifying investor. And that is done by filling out a questionnaire and some other controls or questions or requests that we may ask, depending on the jurisdiction that you're from. If you're from the US, we may ask certain questions. If you're from other countries, we may ask others. It's important to note that the secondary market may not be available to all investors on the platform. If you are verified and certified and you're wanting to make a primary investment, that does not mean necessarily that you'll be able to enter into the secondary market. And you should check to see what eligible countries are able to participate in the secondary market. On that point, the US example, at the moment, you can participate in the primary market. But when it comes to a year later, because with the primary market, we request people to hold their shares for at least a year before even the secondary market is a consideration, that US investors in a position that they can sell. But at present, US investors cannot buy on the secondary market. So to summarize, the secondary market requires the identity verification component. We need to determine if you're from a sanctions list country. There may be other restrictions. If you pass that, then you're going through certification. And if you're a qualified investor and you're not from the US, then you can enter the secondary market and put in a buy order. That's the situation at the moment. It may change over time, and we'll of course keep you posted. But our goal is, of course, to make it as pervasive to everyone and make it available to everyone where we can and make it available to everyone. Bear in mind that there's a lot of research that's required, a lot of legal research, regulatory research. We have to test the markets and understand locally what is happening in that market from a legal point of view. So, it's not that we're just, restricting you from investing. Don't take it that way. It's because we've done our homework and research, and at the moment we may not be able to serve you, but we'll, be wanting to if we can.
Okay, Simon, this next question's for you. Will all the companies that have raised funds on the Bank to the Future platform be available on the secondary market?
Yeah, so this is a really good question. And when we first entered into beta, it was kind of like the whim of the team and what we thought was right. So what we've been working on is really some principles around what is the minimum requirement to make it to our secondary market. And two of those are really easy to verify, and the third one is a little bit more tricky. But as a minimum requirement, what we're looking to do from here, when we come out of beta, is we want to go live with one market every week. So at the time of this live broadcast, we're just about to go live with the Bitso SPV, which is the largest crypto exchange in Mexico. And they just had a recent pricing event, and a series of high-profile venture capitalists came in at this price. And so we're releasing that with the price floor of where the venture capitalists, the full-time professional investors that do this by career, where the price that they entered in at. So that would be the price floor. And we're looking to enter another market each week. And how are we actually going to determine that? Well, we've initially set 3 criteria, and we really appreciate any of your feedback around what you think additional criteria might be based upon your investors' feedback. But the first is that they've actually launched a product. So we, in our primary market, might launch a company, might invest in a company that has an idea or is in the middle of developing a product. We want the product to actually be live. We don't want to have a secondary market for products that aren't live yet, because we think that that level is for the primary market and not quite for the secondary market, where people may not, because the reason that we do this is in the primary market, we're working with the company, and the company in securing their funding will be willing to disclose more information, and there'll be certain requirements around disclosures. In the secondary market, we're not necessarily working with the company. The seller is not the company. The seller is somebody that bought the shares. In which case, we don't necessarily have any rights to any information, and therefore it's a bit trickier for an investor to be able to try and get the information that they need. And so one of the really important things that we do is we disclose, you will not have information rights, and that makes it higher risk, because you can't force the company to give you information. And so one of the criteria based upon that is that they have a product already on the market. It's a well understood product. People know what that company does. They're not, it does, that's the first criteria. The second criteria is not that they've just built a product, but they've sold a product. They have customers. They've proven that they can build a product that people actually want to buy or use. So, when you're looking at all the companies on the secondary market, you clearly know what their product is, and also they've got a bunch of customers that have used their product. That's the second criteria. The third criteria is a bit more subjective and has a bit more legal nuance. But we have an investment committee at Bank to the Future that all, that all decision making is spread across different parts of the ecosystem within Bank to the Future. And one of them is that none of the organization at Bank to the Future does not have information that makes us feel that the company is on a path towards failure already. That doesn't mean that they're not going to fail, because this is still high risk, high return investing. But we haven't been given any information through any information rights that we may have or may not have. It depends on we disclose whether we have them or not on the secondary market. We haven't been given any information that makes us feel that this company is on a path to failure. We don't really we're not in the game of saying whether this is a good investment or bad investment, but we just want to make sure that we haven't got some information that's been brought to our attention that this is just, the original investors dumping their stock or their SPV onto another investor that doesn't have quite as much information and this investor knows that they're on a path to failure. If we can prevent that wherever we can, it's not a perfect system. Then if we have such information, then they wouldn't qualify for our secondary market. Or if they're on our secondary market, it's worth noting that we have the right to suspend that market if such information comes our way. The whole essence of this market is not for insiders to have more information than other investors, and therefore they get to sell their shares to. That's what we're trying to prevent. That's a very tricky thing to achieve, but that's the essence of why we introduce this rule. That doesn't mean that we can offer some kind of guarantee that they're not on a path to failure. It's just that we haven't been disclosed some kind of information that makes us think. So we have several companies on our primary market that have disclosed to us that there's board disputes, and therefore they're thinking of closing the company. If that type of information was made available to us, we wouldn't put it on our secondary market. That type of thing. Or we have certain information that the company has disclosed to us that that this is really not going the way they wanted it to go, and they're very close to running out of money, and they're not thinking of doing a further funding round because they think it's a failed project or something. If we had information like that, then we wouldn't allow it to go on our secondary market.
Yeah, and I think a point to raise is we have a wireframe, if you want, of policies of how this secondary market is to be regulated. But as we proceed, though, that policy may evolve, and details around what is the criteria, what isn't the criteria, what we do under certain circumstances, all of that detail may start to come out, and the policies may change somewhat or evolve to adapt to what we are learning from the use of the market. And in effect, we want to ensure a fair playing field for all persons who are entering into the market, and that requires us, to somewhat regulate it. As we were saying, this is essentially about alignment of interests. We don't want a situation where investors who were participating in the primary market and newcomers into the market, and newcomers somehow are disadvantaged by their lack of information, that other people may benefit from that. So it's about a level playing field, and to ensure some fairness in the way that that's done. So details to follow, but those are the basic 3 principles that we're adhering to.
So if I may, just quickly, just a question that came through in the live chat from John H. Will you cancel the orders that are below the price floor when implemented? For instance, everything below $16 for Bitfinex.
So the policy that we came up with is that anyone that participated in the beta market before the price floor feature was introduced, they can still have their orders. Those orders are still valid. And that's really an incentive from those that were participating before everyone else. So those orders are still there. And once those orders are taken, then no order can be placed below the price floor, was, we thought, the right way of doing that. The Bitfinex specific case is an interesting one, because the actual last funding round was done at $1, but there were a series of secondary trades. And so therefore, this requires further thought around what we set the price floor in that circumstance. But officially, the price floor is $1 in the case of Bitfinex, because that was the last funding round. But there were secondary trades that happened outside, and we have some confirmed and some that may not be confirmed. So where we have a confirmation that trade actually took place, then I think we'd use that as the price floor in that unique circumstance, where my guess is that Bitfinex is probably never going to do another funding round, because the company is, they generate extreme profits and revenues at the moment. And I don't see why they might want to do another funding round in the future, So that's where it introduces an interesting, new dynamic of when a company is thinking slightly different than the normal company that's doing multiple funding rounds.
And when a company is doing really well, by the sounds of it, Bitfinex is doing really, really well.
Yeah, so I mean, Bitfinex, a cash machine essentially. They bring in significantly more revenue than they spend, and therefore, why would they sell more shares in the future? Well, they might decide that they want to do a huge growth exercise, or they might decide that they want to go public in the future, or they might be acquired. But the likelihood of them actually wanting to do a private funding round feels pretty low to me at this stage. Doesn't mean that it won't happen, but my guess would be that they have no plans to do a funding round.
Okay, cool. So Adam, this next question is for you. Can you please explain a little bit more about the lock-in periods with respect to the secondary market trades?
Yeah, of course. As we were explaining earlier, the primary market is when you come in and you invest in that SPV, as we've explained. The SPV then purchases the shares from the company. But what we expect is once you make that investment, that you're going to be holding that investment at least for a year. That's our expectation. So that's what we call the lock-in period. Now, it's not because we want necessarily to stop you from trading, but there are certain regulations that are in place that would prevent you, and that's what we have to enforce in this case. So the lock-in period is a year in the primary market. If you invest, you're going to be holding your shares at least a year. And then after a year, at that stage, we'll announce whether or not that company, based on the criteria that we've already discussed, is eligible to be listed on the secondary market. If so, then the opportunity of being able to sell your shares will present itself. So, that's what the lock-in period is, in effect. It's there because of a regulatory reason. And also, I think another side of this is, we wouldn't want to just introduce an immediate secondary market afterwards. This isn't an IPO where, you're doing a pre-IPO and then now it's going to be listed. That's not the type of arrangement here. You're making a private investment into a private company, and then later on down the line, we're introducing a secondary market that is in alignment with the last funding round of that particular company.
I think another point to add to that as well is that there is no guarantee that any of our primary markets will make it to the secondary market. In fact, we may not legally be able to do that, because when we sign an investment agreement between the SPV and the company, there may be certain restrictions that they enter in, that they insert into that agreement, whereby we would not be allowed to make a secondary market for the SPV. So sometimes legally we would not be entitled to do that. So we only do it where we actually can.
So are investors privy to that information beforehand?
I think that's a really important additional disclosure. Now we're bringing the secondary market out of beta, that we should definitely be, that we will add, in fact, to the disclosure documents, whether there is any restrictions on whether we could have a secondary market in the future or not. I think that's a really good point that's come from this.
Cool. So the next question I have here, Simon, what are the currencies that we can use on the BF secondary market and why?
So right now, all of the market is denominated in US dollars. And so we haven't got, for example, a Bitfinex to Bitcoin market, a Bitfinex SPV to Bitcoin market, or a Bitfinex SPV to ETH market. We've got a Bitfinex SPV to US dollar market. But that doesn't mean that you have to have dollars. So if you meet all the criteria to be investor on Bank to the Future, then you can deposit funds to your US dollar wallet. And we allow you to deposit, currently we allow you to deposit Tether, which is a stable coin backed by dollars. or we also allowed you to do a bank wire for US dollars. We're currently working on features that will allow you to automatically have other currencies outside of dollars converted into dollars, and also try and support more. For example, we'd like, these features aren't live yet, but we'd like you to have the ability to deposit Bitcoin and then it automatically get converted into dollars so that you can then purchase on the secondary market. But that requires additional work that we're currently working on, because it introduces new regulatory considerations, and also it's a new area of business. So we're currently working on those areas. Often at Bank to the Future, you know, you'd be forgiven for thinking that we're slow at things, but often the features that we know our customers want involve new license applications or, you know, completely new levels of research into regulatory requirements. So unfortunately, when you're in an area so tightly regulated, what your customer wants is not necessarily what you can deliver just as fast as you can code it. It requires a lot more.
All right, so moving on from what currencies we can use, what's the fee structure on the BF secondary market?
So it's 2.5% to sell and 2.5% to buy. If you're own Bank to the Future tokens and you deposit them to your BnkToTheFuture.com account, then you get a 50% discount off that fee. So that would make it 1.25% to buy and 1.25% to sell, but you'd have to pay your fees in Bank to the Future tokens.
As in, that's a selection you can make on the platform, right? You can choose whether you want to pay with BFT or you want to pay with US dollars.
Yeah, so you can pay with your tether that you have on balance or your US dollars that you have in balance, or you could deposit some Bank to the Future tokens and pay the discounted trading fee, but it would be paid in Bank to the Future tokens, and it would take the exchange rate derived from the live exchange rate between dollars and Bank to the Future tokens at the point of actually transacting.
So I've had a look at that, and we don't show the live exchange rate at that moment in time. Do you think that that's something that we could introduce soon?
I thought we did already. Maybe that's I know that there was a new release today. I'm not sure if that was included in
Oh,
that.
like, you know, when you switch it, I don't know if you can show your screen, but when you switch it to, I want to pay my fees with BF token, I was just wondering if it does show that. This would be good to see.
So when you actually make the order, whether it shows it there or not is an interesting question. I might have been logged out now, but I know that when you actually place a trade, there's a complete summary and it breaks down the exact fee you're paying, how many Bank to the Future tokens, how many dollars it is, depending on how you're doing that.
There, right? Yeah.
Yeah. So this account. So you would like the exchange rate around here? Is that the suggestion?
Yeah. What do you think? I don't know. I mean, it does say 2. It does actually show what the trading fee is.
Okay. Yeah.
But the exchange rate would be interesting to see as well.
Okay.
Maybe.
Yeah. So at the moment, it's all in the order summary.
Yeah.
But if we could add it there, that might make things a bit clearer. Live user experience.
So is there a actually let's whilst we're here, so can you explain the process of depositing and withdrawing funds from the BF secondary market?
Sure. Yeah. So let me see if I can do that now. I don't want to gox myself, for those of you familiar with what that term is, but this is a dummy. So, caught me off guard with that one. So you just simply go to the fund section of your account. So I think here we can go to the fund section, and you'd simply go to, here's some one, you go to the US dollar, and then inevitably this user experience is going to be updated as well, because we're making some changes. But you can just simply go to the deposits, you can say how many US dollars, and then you've got the choice of actually doing it via a stable coin, or actually, if I click here, I'm not going to do that. It will then show the bank details that you can transfer. You just simply send funds either to the wallet if you want to do it via crypto, or to the bank details displayed. And then you can use those to either invest in a primary deal, a secondary deal, or whatever you choose.
We also have a fees page as well, right? So if anyone wanted to have a look at what our fees are looking like, it's just, where is it? Somewhere there. Maybe I can find it and then share my screen.
Yeah.
Never mind.
And then there's also the withdrawal process here. So if you've got some dollars on your account, then you can just simply enter the stablecoin address that you'd like us to send those funds to, or you can enter the bank details. Now, there's a few rules around the bank details. With the bank details, it has to be, if you've deposited funds, it has to be the same bank that you deposited with. And it has to be in your name as well, because that's our regulatory requirements around that.
Yeah, cool. So, okay, so I've just posted the URL link in the live chat for anyone who wanted to have a look at the fees page. It's BnkToTheFuture.com/fees. Okay, so that's the fee structure, I guess, on BS secondary market. And the last question I have here is, is there a minimum and maximum transaction amount for buying and selling shares on the secondary market?
Yeah, we found that $1,000 has been an area that has worked very well. It's the lowest we can go to. And so throughout the platform, we've always done a minimum investment of $1,000. Traditionally, if you, and then that also depends on what type of investor you are. And on the primary market, it would tend, the pitch might say that they don't want to take investors below a certain amount. But on the secondary market, we've set the minimum of $1,000. And I think as we start to introduce new features, for example, a portfolio builder, where you might say that I'd like to invest $10,000 spread across 15 different companies, then we'd look to actually reduce that minimum to meet that criteria. But as a general rule, we think that $1,000 is that sweet spot that we found as a minimum investment size, and to still keep the companies comfortable. So, for example, if we started to allow people to invest like $10, then you'd find that some companies would be very nervous about having someone that can just come in at such a low bar investing in their company, and then they might not necessarily want that. So we found that from our research of working with companies that $1,000 is that sweet spot, and so we've implemented that into our secondary market. We might adjust that as we introduce features that allow you to build a portfolio.
So I have a question, and we are actually hitting the hour mark, and we've actually answered all the serious questions. So MB has asked in the live chat, curious, for the secondary market, are you updating the SPV cap table and issuing new shareholder docs to the buyer?
Yes, we are. That's one of the secret sources of what we built. Behind the hood, we've automated the whole process of the buyer and seller transferring the shares. We're updating the members register, and we've created some very some lean technology that makes sure that that's all backed up in the correct way as per our business continuity planning. And I think this introduces a really another interesting question, which is around, I'll ask the question, I'll get Adam to answer as well. What happens to those registers if Bank to the Future for any reason went bust in the future? Do they still have their shares?
Yeah, everyone is a owner in the SPV. Everyone who has invested or purchased it from the secondary market, as soon as their name is added to the register of members, they are the legal owner of those shares. Now, what do they have ownership of? As I explained in the very beginning of this, it is a special purpose vehicle created with only one thing to hold, an asset. It doesn't engage in business or anything like that. It just holds an asset. It is designed simply for that purpose. And so in the event that Bank to the Future, which is a separate platform connected to this SPV structure, were not to be around anymore, the SPV continues to live, and there are no liabilities affecting its ability to deliver the shares and continue to deliver the shares to the people that are the legal owners. So, we've designed the structure to last 200 years. This is not a startup type of structure. It is designed, for people that want an inheritance plan and transfer their shares, to the next generation. This is how we are thinking when we are thinking about business continuity at Bank to the Future. And, for those that want more detail on how this SPV works, it may sound a little bit esoteric or technical, but we've spent a long time and, trying to work out the best, most resilient structure that essentially ensures that if we fall out of the picture, that you continue to own your shares and that you are unaffected by that event.
Yep. So we're updating that register, and we have, one of the things that's happened during this lockdown is our regulator has been putting together additional processes for inspecting what happens under a lot of different circumstances. And so we've had to be very thoughtful in thinking through those processes and ensuring that there's a robust process behind that.
Simon, if you don't mind me just covering one quick question that's showed up in the live chat before we cut off. So we have an investor here from Bank to the Future. So they've got shares in Bank to the Future, and they're asking, is that sellable in the secondary market? We have done an update in the investor zone there anyways, but if you could answer that just to clarify.
Yeah, so I mean, we're a pretty transparent company. Normally that would be a question that we could only answer to our shareholders, but because it's our company, I'm happy to answer that anyway. Of course, we want to eat our own dog food, and we would like to have our shares on the secondary market. We've been waiting for the features that would make us comfortable being on the secondary market, and one of those features was the price floor. So this puts us in a position where we have to be our own customer, and we have to think about what are we comfortable doing in order to be on our secondary market. And we've also got to time that with any plans that we might have around future funding. So it gives us a great opportunity to actually think from the investor perspective and also the client perspective. And if we can't build a product that we're comfortable using with our own shares, then I don't think we've succeeded. And so that is one of the big reasons why we wanted to introduce this price floor feature, because we were also thinking about what helps protect the valuation of our investors and also our company as well. And that was one of the things that made us think along these lines before we released that on our secondary market.
Cool. I think that does it, Simon.
Excellent. Okay, so I think this was very informative. I think it's really dangerous for us to often assume information, and often in this financial technology industry, you've got technology which is jargon rich, you've got finance which is jargon rich, add finance and technology through fintech, and you have a spaghetti junction of jargon. So our goal really is to try and explain these things in simple terms, and they're pretty complex sometimes as well. So if we've done a good job of that, then do let us know. If we've done a bad job of any of that, then let us know what requires further clarity, And we go live each week on Bank to the Future Live to try and make sure that we're making things clear. And you can always reach out to our investor relations team with your questions. Famida heads up that team, and she'll make sure that we're getting those questions answered. Yeah, so that's going to do it for episode 60.
Oh, and like and subscribe,
Oh.
like and subscribe.
Yeah, there you go. You got to remind me. So yeah, if you enjoyed this, please do like, please do share. We'd like more people to get this information so that those that qualify know that such opportunities are available. And as we start releasing more and more secondary markets over the coming weeks, now that we've got those features in place, we look forward to letting more and more qualifying investors know that they can actually get complete exposure to the growth of this industry. And from my personal perspective, why we got into this in the very first place is because we believe that the future of finance is going to look very different from the past. And we believe that every financial product is going to be disrupted one stage at a time through technology. And we also believe that the Bitcoin and crypto industry over the last 10 years has only just got started. And we think there's a lot more growth to experience. And so we create this high risk, high return environment of those that qualify to invest to be able to get exposure to the growth of the industry if they're thinking long term and they like these high risk, high return types of opportunities. And obviously diversification is a really important part of that. So us being able to use the secondary market to allow people to get into what they may have missed and diversify responsibly is a really important thing that we'd like to bring to the market. So thank you, Adam, and thank you, Famida, and thank you all of our investors that participated. Yeah, we'll see you for this time next week for the next episode of Bank to the Future Live. Like, share, subscribe. Bye-bye.